And hello, everyone. Welcome to this very special webinar, How to Play Quantum and also AI Stocks Using Options. As you will learn today, a very topical theme because for various reasons. First of all, quantum is a fascinating topic and it has the potential to revolutionize the way we compute things, we solve problems, and so forth. With this, let's get into it. My name is Daniel Sinek, and I will be your host today. And a quick reminder that this session, of course, will be recorded, and you can watch the recording shortly afterwards on this page here, tradingindicators.com/alerts. And Homa, perhaps you can put this link into the chat box to watch the recording afterwards. Also, I need to remind you that trading stocks, futures, CFDs, but also options does contain substantial risk and therefore is not suited for every investor. If you trade, make sure to only use risk capital, which is money that you actually can afford to lose. When it comes to backtest performance or hypothetical performance, keep in mind that this is not necessarily indicative of future performance, and any trade ideas and strategies and setups discussed in this webinar should not be construed as trade advice. These are for educational purposes only. All right, so with this out of the way, let me properly introduce myself. So I am Daniel Sinek here on the left-hand side, and I'm with tradingindicators.com, your number one online store for all your trading needs. We have been founded, we have been created about 10 years ago, together with Homer here in the middle, and about halfway through, Nicholas, also here on the right-hand side, has joined us. And over the years, we have built hundreds, almost thousands of trading tools, trading indicators for clients all over the world. We've also looked into dashboards, scanning products, and even fully automated strategies. Most of what we do is rooted in what's called technical analysis. Even though today's topic is a bit more fundamental, most of our tools are rooted at their essence in technical analysis, which is basically a mathematical analysis of your price chart. We believe that fundamentals are almost immediately priced in. And by analyzing a price chart from a technical point of view, you will indirectly also take into account that fundamental information. We also believe that trading can be simple, and trading, in fact, is simple, but you need to get the right guidance and you need to know what to look for. And one thing that we are considering here at Trading Indicators very strongly, we're going to share with you today. And this topic is quantum computing. We're going to get to this in just a bit. But before we do, let me introduce to you the option professor, Jim Kenny, who is in the room right now here with us, because he will share with us his unique view of which stocks might be of interest when it comes to stepping into the quantum computing field, and why and how you would trade them, potentially using options. And Jim, do you want to quickly introduce yourself before we I move on and talk about quantum computing in general?
Sure. Well, I'm Jim, the option professor, and I went to school up at Boston College, UCLA, for some executive management, and I basically was doing options my entire career. I went to the Options Institute in Chicago, and I've traded thousands and thousands of options, so I'm very familiar with the product. And what I do every week with the Options Alert, and what I try to do here today, is to share my expertise with you on some ideas that hopefully will have merit for you. So that's what I try to do, and we try to improve you as a option trader. Try to develop you as your best option trader you can be.
Perfect. Thanks, Jim. Thanks for the quick introduction. Jim is going to be back with us in just a bit. But before we do, let me introduce to you what is on our agenda today. What do we have planned for today? So we're going to start off with just a little bit of, theory. Should I call it like this? I'm going to give you a quick overview of what is quantum computing. What the hell is this? And why this might be the next big tech revolution. In tech, we've had several, groundbreaking changes that came on. The introduction of the internet, for sure, was one such groundbreaking change. AI recently, also a groundbreaking change with, look at NVIDIA, what kind of move they've done. And now we're at the verge of introducing quantum computing to the world from a practical point of view, a technology which existed for many, many years, but it was fairly impractical because, the technology to take advantage of quantum computing was super sophisticated. and not meant for mainstream. But this is about to change, and how we can take advantage of this, we're going to discover in this webinar. So I'm going to talk about quantum computing as an introduction. Then we're going to move on, and Jim is going to share with us his market review with a special focus on stocks which are in the field of quantum computing, but also AI. We're going to talk about why options might be the right way to trade these stocks, which are perhaps more speculative. And options could be a great way to do it because they limit your risk. We also have a special offer for you guys, and there will be plenty of time for Q&A towards the end of this webinar. Having this said, please don't wait until the very end. If you have a question, simply put them into the Q&A box. I'm gonna keep an eye out for them, and we may address them as we proceed through this presentation. All right, with this, let's get into it. We're gonna try to answer the question at first. Is quantum computing potentially the next big tech revolution? And I tell you what, we could answer this question from a theoretical point of view, or perhaps from a scientific point of view, but we can also answer this question just by observing what's going on around us. Yeah, the NVIDIA GTC conference is about to start, and guess what? One day of this huge conference, which attracts thousands, tens of thousands of developers and people in that field, one day is devoted just for quantum computing. This should give you an idea of how important this topic has become. Also, I have experienced and observed firsthand how important quantum computing is. This was a picture which I've taken at the Singapore FinTech Festival, a huge conference. I attended this conference last year in November in 2014. It was a huge conference, and guess what? Almost every second or third stand at this conference was dedicated to quantum computing, which shows to you what the finance industry sees as how important quantum computing has become and how revolutionary it may be to the field of finance. But it doesn't stop there. As we will see, quantum computing can be, has the potential to be very influential and groundbreakingly changing the industry in finance, in healthcare, in supply chain, and so forth. Right. With this, let's see what is quantum computing all about. Well, first off, it is basically creating, and I oversimplifying this a lot, it's basically creating a computer based on the very building blocks that nature is giving us, leveraging the smallest pieces that we could use for any computation. All right. Now, we all may know, hey, perhaps you may have heard of, bits, classic computing, which can be either true or false, or and this is classic computing. And all our regular computers that we're using right now, my laptop right now, your computer at home, your iPhone, your Android, all these are based on this traditional way of computing using bits. But with quantum computing, this has changed, and the notion of what they call qubits has been introduced. Now, a typical bit, like the traditional model, can be either true or false. That's it, one or the other. But with qubits, these special things that actually exist in nature, they can be in multiple states at the same time. And this opens up the realm for a completely new paradigm of computing, which has the power to solve even the most complex problems within seconds, what otherwise would take years or tens of thousands of years. Because of this new paradigm of computing things, of looking at things, of solving problems. So that's, as far as I want to get into this theoretical part of what quantum computing is. Just so real quick, there are a couple of things that you may have heard, and I just want to tell you, hey, these are all related to quantum computing. So somebody tells you, hey, what's a qubit? Well, now you know. These are the basic blocks, the smallest pieces of which are the building blocks of quantum computing. There's also the concept of superposition, which basically explains, hey, a qubit can be in multiple states at the same time, which is very strange, but hey, this exists in nature at the smallest levels, at the subatomic levels. There's also the principle of entanglement, which basically explains, hey, two qubits, they can be interlinked, even if they are physically miles, tens of thousands of miles, light ways apart. So if you change the state of one qubit, the other one, which is, so far away, will also change its state. It's very bizarre, but that's one of the principles of quantum. And We have the principle of quantum gates, which allows us now, and this only has come recently, to perform mathematical operations based on these qubits. And once again, this is basically using nature's building blocks to perform computation, which opens up an entire new dimension of what can be done. Now, where are current applications of quantum computing? And yes, these already exist. These are already out there, and it's only going to get more and more. First off, cryptography. With quantum computing, this is, I believe, was why the finance institutions were looking into quantum so much, as with quantum computing, you can create unbreakable cryptographic algorithms. And more importantly, theoretically, it is possible using quantum computing to break current encryptions, which are based on the traditional paradigm. So this can be even a safety issue which needs to be addressed. So, big thing, cryptography, but also drug discovery in the healthcare industry, which requires running simulations and experiments and very complex computations, which would take years to do, now take hours, perhaps days. So you can cut down the days and the time it takes to discover a new drug, which is vastly based on trial and error. Just try different combinations, and hopefully one of them will have the desired effect. So, if you have tried to try different combinations, it may take a very long time until you find the right one. But with quantum computing, this time to find the right combination can be cut down by a lot. Other applications are financial modeling, but, and this is very important, also artificial intelligence. So quantum computing has the power to even further advance of what is already quite incredible, what can be done with AI. Imagine this. So what are some of the future applications? This is the current application, but what is possible in the future? Well, first off, we can speed up super complex computations, which would take years to finish, or perhaps even thousands of years. It can now be done in hours and a much shorter time frame. So this opens up the realm for a completely new paradigm of looking at things. Maybe trial and error, as we've done in drug discovery, is now a valid paradigm, because now we actually can try out all these different computations and combinations within a reasonable time frame. It might also revolutionize material science and engineering, very similar to what has been done in drug discovery. Once again, based on trial and error, which is not feasible using the current paradigm, but which might become feasible using quantum computing. And other areas are logistics, supply chain management, but also cybersecurity. As mentioned, with quantum computing, it might become possible to crack current encryptions. That's a huge security problem, which we have to deal with this at some point, probably. We're not there yet, but this is definitely a threat right now. And on the other side, however, with quantum computing, it will be possible to truly create unbreakable encryptions, which nobody can break. All right, now back to my original question. So sorry for the little detour. Back to my original question. Could quantum computing be the next tech revolution? My opinion, yes, absolutely, because it opens up the realm for unparalleled computing power, which we don't have right now with traditional computing. It will blow away what we have right now with traditional PCs by a magnitude. But of course, there are limitations. One such limitation is that the hardware required to run these quantum computations is extremely specialized and extremely expensive, and oftentimes they're huge. Let me go back really quickly to my original picture here. Quantum computers can look like this, a huge apparatus which does kind of crazy things. They also need to be run in a very special environment at super cold temperatures near the absolute 0 point. As you can see, there are a lot of challenges involved, but as if anything in tech, the regular computer used to be huge as well. As if everything, we're going to get a hang of it, and things are going to get smaller, more efficient, more affordable. And then when this happens, I believe quantum computing can become mainstream. And if it does, it has the power to become the next big tech revolution, just like the internet, just like AI. All right, so it's potentially a game-changing technology. And one piece of evidence of this is NVIDIA's GTC conference. Starting next week from March not match, March 17 to 21st, very soon in San Jose. And one day of this huge, huge conference is devoted, as I said, to quantum computing, showing you how important it is to these big tech giants to look into the field of quantum computing. And NVIDIA is not the only one, not the only player. Microsoft, IBM, Intel, other companies are also looking into this field as well. All right. So with this, let's get practical. Let's talk about, okay, which stocks may or should you consider perhaps if you want to get some exposure in the quantum field. So, Jim, could you take this question away and perhaps share with us your view? What might become important with respect of quantum computing and stocks which are in this field?
Absolutely. And you want me to do a market review after we do this, right?
Or mix it together, yeah. But perhaps talk about quantum first, and
Yeah,
then
let's talk about
let's do a
quantum first,
market
because
review after.
I'm sure there has to be a few people interested on what I think or what it looks like the market might do, since it's been so, shall we say, volatile. So we'll get into that for sure, but let's get into this subject first. Okay, I'm looking at 5 large cap and 5 small caps in this space, and I think they all have merit. And obviously, the small caps, if they happen to turn and make a run, they have a lot more percentage upside potential than the big ones, because the big ones obviously already have high prices. So anyway, you've got IBM as one of the big ones, and they're into this thing pretty heavy. They've got a thing called Qiskit, and it's IBM open source quantum computing software development kit. And so they're already into this business pretty heavy. So if I was to be interested in this, and I thought it was going to, they have the conference next week. So if you go out till April 17, and I'm looking at things either short term, like it bounces out of this conference, or longer term at the end of the year, where by the end of the year, this thing develops and develops and develops, right? So I'm going to show you both a shorter term option and a longer term option idea. So you can see, oh, I'm not sharing yet, am I?
I was just about to say,
I'm going to say, I talk as if everyone's seeing and no one's seeing. So let's see everybody in on my secrets here.
All right, it's building up. Perfect. We can see it now. Yeah.
Beautiful. Okay, so there's International Business Machine. Like I say, I like to buy things after they revert to the mean. So down here at 215 was very interesting, and kind of in this neighborhood's kind of interesting, because if they don't let the trapdoor out, and go down to 230, something could happen here. So if you were kind of thinking something might happen, one last thing on the stock market generally is the gentleman on Bloomberg said that the volume on the NASDAQ was over 75 million shares today. And historically, we've had bounces after that type of volume, because obviously 75 million or better is extremely high volume. And that kind of gives you a little bit of a potential flush out. Not for sure, but it's something to watch. If in fact we are going to bounce, the call options when they closed on IBM for April 17 at 255 was about $500. I'm just going to show you this because, we're not in a rush here. I want to show you how you can get an idea here on if something was going to move for you, what you could possibly make on it if it happened fast, meaning the time doesn't come out of the option too much. Okay, so I'm just going to show you here by going to the 17th. And you see I'm looking at here the 255 calls for 517. If we got a $10 jump on it fast, you could easily go up to where 245s are, which is around 10. And if you got a $15 or something move, you get a look on how much the premium can really appreciate if in fact we get a bounce. And of course, the volume wasn't bad today, and there's a decent amount of open interest in it. So there you see there. But I just wanted to show you, why you can look at some of these option chains and get a feeling for which one seems like it's the best price for your objective and how much you might make if you get a move. And it's nice to have some kind of, especially if the time doesn't run out. Obviously, you're looking for the time decay to not hit you too hard. Okay, so let's go back over here to the chart. And the second thing I show you on IBM is if you wanted to go out towards the end of the year, something like September 19th, you could get a call at 250, pretty much near the money, and sell the 280 for about $10. And if we went back to 280, making, say it gets going, makes another high because everything works out well, that could go up to $30 max. So that's that on the most exciting ones are the small caps, but I'll show you some of these big guys because these guys are discounted now, particularly like Alphabet. So Google, has had a big drop, and it has come down to a neighborhood that might be interesting if it can start getting some support down here. Let me see what it looks like on the 20-year graph, just to give you a perspective here. Yeah, you see, if it can get back above here, back into the 170s, it would be pretty good. But at any rate, if you were thinking we were going to bounce out of this neighborhood, and again, the RSI is right around 30 here, so it's getting pretty low. If we were going to bounce out of this neighborhood, the April 17th call options at 175 are $292. So if we were to jump up towards 180 here on some kind of a short covering rally here, then obviously those could get a pretty good pop on them. If you wanted to take a longer view on Alphabet, then you would go out till September. And if you look at a 170, 190 spread, it goes for about $8. So if it goes to a 190 or better by September 19th, you could go to 20 and you're putting up 8. So it's not terrible. And again, you do have to have this whole thing turn around, though. I'm not a proponent of it right now.
And yeah, and Jim, also Google, I believe, is invested heavily in the quantum space. Is
Oh
that
yeah, I
correct?
forgot. Yeah, I forget to mention that. I'm not. This is my first round trip on quantum stocks. But anyway, Google has a new quantum chip called Willow, which significantly reduces errors on its scales, and it scales up a major breakthrough in quantum error correction. So they got this new chip that corrects errors very, very fast. That's very important because that's one of the reasons people like quantum is it's extremely fast. It can handle complex things, and it corrects errors very fast. So obviously there's an attractiveness to that, especially to major companies like Google. Okay, so anyway, that's the story there. Next one up is going to be Amazon. You would figure these guys were in it. AWS obviously is going to be into this kind of thing and in a big way. They're also going to possibly partner with people. And that's where the excitement is on the small caps, which I'm going to get into in about a minute here. Because, these small caps, maybe they get bought out by these big guys. As you can see, Amazon's sitting right on the dock of the bay here. We would like to say keep this thing right above 195, 190. So if we can do that and the tide turns a little bit, because again, something happens to make people want to cover their shorts, that would be a good time to take a shock at it. And AWS also has a thing called Penny Lane, which is an open source software library for quantum computing and application development. And it's also used for something called the Amazon bracket. So they're into this thing hook, line, and sinker. There's no doubt about it. They're into everything, though, right? They're worth $2 trillion. Okay, so anyway, on Amazon, the short-term deal on April 17th is a 210 call for about 292 bucks, or a 205 at 435. So if we snap back to 210 or 215 or 220 for whatever reason, obviously these things would scream. If you want to go further out in time, the ones going out to the end of the year, I believe there's September or December, 195 call against the 225, cost about 11 bucks. And, that's $1,100 versus if you bought the 195 shares, it would cost you almost 20 grand. So that's why people like to use these options to replace their risk. In other words, if you want to take a shot at Amazon here at 195 and you do the option, it's $1,100 total risk. If you buy the stock here and it goes to 150, you're going to be down 4 grand. So that's why some people like to use limited risk options to get exposure, either after the stock has gone way up so they can limit their risk if it tanks like this one. So, if you were up at 240 and you dumped your stock and bought a call option at 245, the only thing you'd be out is the premium. Now you're out your shirt, your pants, and everything else. So that's why using these options and talking to me and understanding how you can use them, not only for speculation, but for hedging, is a real big thing. So that's the story on Amazon. And then the last one I have, which is Intel. People are surprised, but Intel's into this thing pretty heavy. They have got, what do you call it? They've got a lot of R&D going on in the area. They got silicon-based spin qubits. And are working with institutions in the field. And so they've got a lot of things. They got a thing called Pando tree chip. They've got a tunnel fall chips. So they got a whole bunch of stuff going on in this area. And so their new CEO used to be the CEO at Cadence Design Systems. Go look at the stock of Cadence Design Systems, and if you could do half as good at that as that here, that would be a heck of a thing. So this thing is obviously at a discounted price, waiting for some good news, and maybe this new gentleman who's going to run it, named Lip-Bu Tan, is going to be the guy to make it happen. So on Intel, if you wanted a short-term deal for April 17, you can get a $23 call, which is already in the money by almost a buck.
And Jim, maybe scroll down the chart a little bit so we can see it full.
Okay, sure. Oh, yeah, you can't see the whole thing. Okay, that's called a discounted price, right? 44 down to 20, right? So if you wanted to sell it, you think you probably have? If you haven't, you must be out of touch with reality, because that's a pretty long time. And then if you're short the market, you think you're going to keep pounding it down here? So again, that's why this thing has a lot of potential on the upside. And that's why if you took your shot down here near the triple bottom, it was a great time to take some calls. It was also one of the ideas I put on my weekly list. So that was a good thing. But anyway, right now, $23 call expiring April 17th is only 213 bucks. So if it's going to go, up sharply from here, that's not bad. If you want to go out to the end of the year, you can buy a $25 call for 400 bucks or a $30 call for 247 bucks. So if this thing is going to do a real turnaround by the end of the year, you can see 40 is a potential destination. And obviously that would make the $25 call for 400 look pretty good. And even the $30 call for 247 look pretty good if they can turn it around and obviously get this thing to get up towards these new resistance zones. All right, let's talk about the exciting stuff, which is what? The small caps. Yeah. All right. Well, one of them announced earnings. This is very bullish in my view. One of them announced earnings today. It's called D-Wave. D-Wave is the world's first supplier of quantum computers, and their symbol is QBTS. So we're going to put that up there, and we're going to take a look. Now, why is this bullish? Well, they just announced earnings, and their earnings were down. Their revenue was down 27%, and their net income was down 41%, and their net profit margin was down 93%. So would you think that stock would be tanking, right? Look at it right there, up 18%. Why is it up 18%? Because they made a very big announcement. And what is the announcement? They announced that they have a computer, an annealing quantum computer that outperformed one of the world's most powerful supercomputer in solving complex magnetic material simulation problems. That's a mouthful, huh? With relevance to materials discovery. So add all that together. I'll give you the cliff notes on that too. They came out with something that's pretty darn revolutionary, and people want in. And you go look at the volume today. It was off the charts. And who's not to say during this convention, somebody's going to want to say, hey, I think I'll give you some money to do something, or maybe we just want to take you over. You don't know. But the bottom line is these guys are obviously into something. Okay, so how can you play them with limited risk? The ones for April 17th at $7, which is very close to where we are now, is 100 bucks. 100 bucks. And that puts you in there through the whole conference and all the way till April 17th. Now, if you want to take a longer term position, which is probably the smarter thing to do, you can go out till October 17th at $6. Now, that's almost $1 in the money. And you're only going to pay $254 for the right, but not the obligation to buy it at $6. And you're already almost $1 to the good. So you're really paying $1.50 for the next how many months? Not too shabby. Again, these are the companies that could have tremendous growth. Why is that? I'll tell you why. This is only a company with 1.8 billion market cap. Do you know how much Google is? 2 trillion. How about IBM? 231 billion. How about even Intel, which has already been aired out, 89 billion. So these guys are small caps. And you know what the short interest is on QBTS? 20% of the stock is short. You guys must have heard about those old meme stocks. That's how you can sometimes get a squeeze, right? Now, who's short this stock is maybe people who own it and they have a hedge on, because obviously the stock used to be a lot higher. So they put a sell on there. It's called shorting against the box. You don't need to know the details, but what it means is they're long the stock and short the stock at the same time. Okay, so they may lift those hedges. And what does that mean? That means everyone wants to buy and nobody wants to sell. So now the market maker, like Citadel and them, they're on the sell side. So you know what they'll do? They could raise the price very high, like they did when it ran to 11, take in all the buying action, and then maybe it falls back. But that squeeze can get you at least a short-term price that could be very exciting. So I think this is a stock worth an eyeball. And with those kind of premiums, all you got to do is don't go out to eat 2 times, and you can pay for it just by that, right?
And Jim, also scroll this one down a little bit so we can see the
Oh, I'm
full
sorry.
chart. Yeah.
Yes. Yes, I'm sorry. Come on, there you go. Yeah. So you can see somebody bought it for $1 and it went to 11. Not a bad deal. What do you think the options did? Now it's had the pullback. It held the green line. That's lovely. And now it's trying to get above red. And again, it had a very good announcement today, and it's going into a conference where all it's going to be is developers and people who are into AI, and they're going to have a whole day on quantum computing. Do you think these guys are going to have anybody near their booth after making that announcement? I would imagine. So that's why I'm bringing it to your attention. Next one up is IONQ. IONQ. All right. And what's going on with IONQ? Well, first of all, what are they all about? They are a leader in the field. They develop and sell trapped ion quantum computers and related software. Their computers are highly accessible through major cloud providers and are designed to tackle complex problems in chemistry, medicine, finance, and logistics. Sounds like they're a one-stop shop for some of these people, right? So they also have obviously they had a big squeeze and they went all the way up to $55. Now they've come back. Do you see these highs there? Their support. So where did it stop going down? Right at those former highs. So this is the place to take your shot if you think it is any good looking to the future, right? That's why I see it. Okay. And then of course on the 1-year graph, what's it doing down there? Hitting the gold, hitting the gold. So if you're ever going to take a shot at this thing, when are you going to take it? At 55 or at 20? You answer your own questions, right? And so how do you, oh, by the way, they have 10% short interest and it's a 4.8 billion market caps. They're a little bigger and a little less hedging, but 10% is considered high.
And Jim, real quick, I think there's some questions out there. What exactly can you read out of short interest? What does such a percentage tell you? 10% or 20%?
Yeah. Yeah, and that's how those meme stocks and Raging Kitty or Roaring Kitty, whatever his name was, that's how he made all his money because they had everybody shorting GameStop or shorting whatever the heck they were doing. And then they bid the stock up with this little community of theirs. And the people that had all these shorts on had a cover. And once they all wanted to cover it the same day and there's no sellers, because look at this thing down here. Are you going to sell if it starts turning up? There's going to be no sellers if this thing spikes up. And so then the market maker is the only guy on the other side of the trade. He has to put up his own money. If he's going to put up his own money, he might bring the stock to $35 and then put up his own money because then he could sell against that blue line. So now you got an idea. You got people short because they're speccing, but a lot of people are short because they got the stock on the offering. They got free stock because they worked there, whatever. And they hedged. Why would they hedge? Because it went from 55 to 20 if they didn't, and they're not silly people. So they hedge. If they take their hedges off, that means buying stock to cover the short. That can create a squeeze. I'm not saying it's going to happen, but you know what? That's the setup for it to happen because why? You're hitting the gold line there. We had the former highs on the 5-year, right? Right there that it's holding. So you got 2 big points telling you this is the place. Like talking heads, this is the place. Anyway, so what are the costs? What does it cost to play the ball game here? Okay, on the one that goes off the board on April 17th at 22.50, it's $260. If you go to the end of the year, December 19, and you buy a 25 call and sell the 65, it's about 375. And how much could it go to? Well, if it goes back to 55, it's going to go to $3,000 from 375 if you can get the full spread because it's above 55 and the time ran out. So there's no time premium left. But I don't think that's not the worst use of $375 I've ever seen. So there you go. If you want to play ball, that's what it costs to play ball. And The next one up, we got two more for you. Rigetti Computing, RGTI. Okay, the story on Rigetti, they got 21% short interest and they're a $2.5 billion company. They are called a full stack computing company because they design and manufacture the chips. They integrate them. They develop software for programmers to use to build algorithms. And they offer things like quantum cloud services, on-premises systems, and a bunch of different things. So they're in the game full Monty as well. And you can see they're very similar charts. These things have been discounted dramatically. And so Rigetti came down to the green line and held on the 5-year graph. Let's see what it looks like on the 1 year. It's holding purple, right? And so, at least there's some reason why it might stop, right? Now, what does it cost to get involved with Rigetti? The April 17th, the nearby one at $8, $8 a share. It's already at $8.80 in the aftermarket, closed at $8.75. So you almost got a buck in there intrinsic, and you're paying 184 bucks. 184 bucks to see the movie for the next month, April 17th. Now, if you want to go to the end of the year, this one's very interesting to me. You can buy a $5 call, which is in the money by almost $4, and sell the $30 call for right around 400 bucks, maybe 500 bucks. Because obviously, like I say, option prices are going to change. So I'm just giving you an indication. You'll have to do your own pricing if you want to look at these things. But if we were to go to 30 bucks, which would mean, well, even if you just went to 20 bucks, your $5 calls would be 15. And if you're in there for your spread could go to 15. And there is a gap here that might get filled, right? So it's not off the table. You could go up there by the end of the year. We're talking about, actually, this is even until next year. This one expires January 16th of 2026. So you can put up the 400 bucks and go to sleep for a while because you got limited risk and time on the clock. And for 400 bucks, you've got some leverage as well. So I thought that was interesting. Intrinsic value of almost 400 bucks and you're paying 400 bucks, unless this thing's going to be a real dud. And if it is, you can cut and run. You don't have to hold it forever. If it starts breaking down, you can always cut and run. So that's and the last one. I guess, yeah, the last one is called Form Factor. Oh, excuse me. I've got two more. I'll do Form Factor first. Form Factor is FORM. Okay, Form Factor. What do? They develop, design, and manufacture cryogenic, not bad, environment systems essential for quantum computing. And they are discounted very nicely here, as you will see. Now let's look at the 5-year graph and see if that helps us at all.
And just a quick note, this cryogenic stuff comes in because you have to super cool down these chips to almost absolute zero. So this is a key thing to have to do any more quantum computing.
Exactly. And that is a big factor. So if you have a product that they can use on that, that's going to come in handy. All right. So anyway, you can see it's down here at a very low price. And so it doesn't have quite the, it only has 4% interest. It's 2.3 billion company. So you're not going to get a big short interest thing. It's basically going to be something that maybe you could get a reversion back to the mean. I'm trying to see if there's a little bit of a divergence down here. Not too much going on. So anyway, but it is inexpensive pretty much to get in there. If you go with the form, the $30 calls are 285 bucks. So that's not too bad going out 1 month. If you want to just take a cheap shot, a $35 call is 95 bucks for the next month. So if it were to spike up, a $35 call going for 95 bucks is going to get a lot of action on it. So those are two ones for next month. And then if you're looking at the end of the year, December, you could do a 35 call outright for 550 bucks. And that puts you good until December 19. So if we are looking at the bottom of this and it is going to go back up, then obviously you could make out pretty good on that. Last one I had for you that I skipped over, which was Quantum Computing Inc. Symbol is Qubit, Q-U-B-T. So there's a few horses in this stable, as you can see. Some will be Secretariat, maybe. Some will be a nag, maybe. But they all look like right now they have something to offer. Okay, so on this guy here, you can see it's way down here. Let's talk about their short interest. Short interest is 14%, and they are only a $743 million company. So this puts the small in small cap, right? But what do? Well, they have an integrated photonics company, and then Daniel will help me with that. Offers accessible and affordable. That sounds good. Accessible and affordable quantum machines. In this day and age, we just saw what happened at Dollar General today. People are into, and we saw what happened at BJ's Wholesale. You know, people like affordable. So that's what these guys bring to the table. Technically, it's holding the $4 mark, so that's not a bad deal. On the 5-year graph, yeah, holding the green. So this is the neighborhood to take your shot because it's right on support.
Yeah. And Jim, just real quick, because the next topic that's coming up after your market review then is, hey, why should you consider options for these kind of trades? Well, for two reasons. First of all, these are highly speculative. It may or may not work out. If it works out, fantastic. If it doesn't work out, you don't want to lose all your investment. You want to have limited risk. And I think options, I believe, is the only way to play at least these small cap stocks. Would you agree, Jim?
Well, I'll show you how much I agree. See, here's why I like options. Because the guys who bought options at $2, they were extremely happy when it went to 28. And you know, the guys who sold out of them and bought new options up here with less money and took all that profit, or they owned the stock and they got out of the stock and put on a limited risk option, they're extremely delighted too, because they only lost the premium during this old drop. So that's a great example, even for a newcomer, why people like to do options. Limited risk, leverage, no margin call, no forced liquidation. And what? If you catch the ride, you catch the ride. Once you catch the ride, you can sell out the one you caught, and you can stay in the game by rolling up your position from these low strike prices to the higher ones, just in case it keeps going. And then if it doesn't keep going, all you lose is the premium you put up, and all that other money is in your pocket. And of course, if you're just getting in here, say you didn't buy it, you got caught up, at least you only lost the premium and you weren't involved in the cascade. So those are two very illustrative examples why risk capital, a portion of your asset, doing limited risk options on a timely basis can be a decent thing to do, in my view. Yeah. Okay, so anyway, now we know why we're trying to take a shot at this thing here, though. You got that support there on the blue line on the 5-year, and you've got what? You've got the gold line right underneath that seems to be holding it up pretty good. If we can get above this number here, I mean, if this thing can get above these two guys that are meeting right here, which comes in at 650. So if you start seeing this thing trading 660, 670, $7, you're probably onto something. And then if it ever clears 8, you're really onto something. And then that gap up here comes into play. So what's the cost of the ticket? Let's find out. You wanted the $5 call for April? For the next month or so, that's a $5 call. It's already in the money by 50 cents. Tonight it's in the money for 60 cents, and it cost you a whopping, this is really don't go out to lunch and you got the money, 115 bucks. 1.15 is the premium. Okay? So, you know, that's why these things are pretty exciting. Not that they're going to happen, but if they do happen, you got a lot of expansion on that premium to have, because 115 can't get lower than 0, and it can go the other way if it gets volatility. So there's your short-term bet. On a long-term, that's even better. You go out to January 16th of 2026, $5 call, still 50 cents in the money, and they only want 223 bucks to get in the game. So that's what makes this stuff interesting. Certainly, it's a subject matter that seems to be gaining traction. There's, as Daniel was saying, there's challenges this way and the other. But you know what? These people have money to spend. You know, look how much money Meta is spending, and Google and Microsoft and Amazon, you know, these hyperscalers. And don't think, Salesforce and all these other guys are at ServiceNow and everybody else. I mean, they're all probably going to get into the darn thing, but we don't know what the timing is. You know what the beauty is? If you put up $200 and it doesn't happen this year, throw another $200. It might happen next year. It's a game you can keep playing because it doesn't cost $1 zillion to get in. So, yeah, that's pretty much what I had for you here. And I think we brought some information to you that hopefully will have some good value.
Yeah, absolutely. And Jim, I think what we're going to do next is we're going to move over to why I have some slides there, why options are the exact right play for these kind of scenarios. And then we're going to take some questions, and then we can also come back to look at the recent market events, what's happening right now in the global indices, and where you think things may be going from now on. So let's do this. Let me quickly share my screen. There we go. All right. Okay, so next topic up is why options, and I think Jim already answered this perfectly. Why would you consider trading options? Well, the perfect use case, the perfect scenario are these small cap stocks, which are speculative. They have a high potential, but you don't want to lose your house should you be wrong. Well, options is the right way to do it. But of course, this involves buying options, not selling options. You must be buying options for this, which only costs you the premium. If you're wrong, all you can lose is the premium. So your risk is absolutely limited and very calculable. You know right off the bat, hey, if I buy a call option with that strike price and the expiration, the premium is $150. That's all I can lose at all ever on this particular trade. So it's absolutely limited and very crystal clear what you can lose. The upshot is that the potential gain is actually, in theory at least, unlimited. Should this thing spike up, of course, then we're in for a big gain, right? So we have this big upside potential and limited risk. So for speculative stocks and things that may take off but may not, not everything can work out. This will absolutely be the right play, especially if it's a small cap stock which has only this one horse to bet on. The bigger ones, the Amazons, the Nvidias, and so forth, I think they are what some people may say, hey, too big to fail. They probably will not tank completely. So the risk is less. But for the smaller ones, which only have this one horse to bet on, you never know. This is why you want to limit your risk, and this is why you want to consider options. Now, having this said, we have recorded an entire masterclass on the topic of options trading, the ins and outs, what you must know to understand options better, which strategies to use. Jim said already before, you can also put on spreads of option trades where you buy an option and sell an option in the same direction to lower your cost. That's the way to do it as well. How this all works and when this is appropriate, and when perhaps you want to consider an outright call option, we have covered in this masterclass. And the best news is today you can get this masterclass led by the option professor. It's 6 hours long, 3 distinct sessions. You can get this masterclass, which normally costs $397. Today you can get it completely for free. Now, if this sounds interesting, please stay tuned for another 5 minutes. You're going to find out how you can take advantage of this masterclass, because we have created what we call an options alerts service. Now, what is this? Well, what Jim just did in this webinar, finding you these interesting stocks which may have potential of having big moves. This is tedious work. It requires a lot of market research, a lot of hours spent reading, listening to the news, doing your own research, and so forth. And I don't know, Jim, how many hours do you spend per week finding these opportunities? It must be countless.
Yeah? I don't count them because it's such a pleasure. I don't even count them.
Yeah, but it
tremendous amount of time. Obviously, you have to go through all the stocks. You have to find out where the setups are correct. Like I just showed you here, there's setups that look very, very, very good, some that don't look as good, right? So you have to go through that. Then you got to look at the option prices. If you're going to do strangles, which we like to do, calls and puts at the same time, or buy any option, you got to make sure the premium is reasonable and the amount of time you're going to put in there is reasonable, that you're going to get the move and there's some chance to make some good money. So that's not on every corner, and that's not on every stock, and that's why it takes quite a bit of time, and that's why people sign up for the alerts.
Yeah, exactly. This is exactly why we have created this alert service, because in there you will receive every single Sunday, like clockwork, our alerts email with Jim's picks of stocks which are of his interest for the week and weeks and even months ahead. And this alert service has three different levels. We have what we call short-term strangles, which are shorter-term plays, which benefit when the stock moves either up or down. We call these non-directional plays. If this sounds Greek to you, don't worry, the options masterclass will cover this. We're also going to look at the major market indices. We're going to get to those later on today to see where are key levels, where is support and resistance, what is the overall trend direction, when to get in, when to get out. And we have longer term or medium term directional plays, which Jim had discussed today. So some of these quantum stocks, these are longer term plays, which you might get in on a speculative basis with limited risk, of course. And if a big move happens to the upside, well, then you're going to be in for a nice home run. So this options alert service we have created for you, comes out every single Sunday. Now, if this sounds interesting, let me give you a little taste of how it looks like. So every single Sunday, you will get first off Jim's overview of what's going on in the market, what has happened, what has transpired, and what he thinks will happen the week after, and what are key events happening in the upcoming weeks. So you're going to get this. And of course, then you're going to get his option ideas for these three levels, which I mentioned. So for example, for strangles, which are shorter term plays, you will see exactly the stock of the strangle, the expiration date, where to place or where to buy your call option and your put option, what is the approximate cost, and what is the industry sector or stock sector this symbol plays in. Why do we include the sector? Because you want to diversify. You get lots of different picks, so don't put all your eggs into the same basket. Make sure they're diversified across different sectors. And here you can see right off the bat in which sector this particular stock plays in. So you see what stock to trade and what is the play in terms of options to take advantage of that. Now, of course, not every idea works out, but especially in 2025, Jim has been quite successful in finding great opportunities which have worked out beautifully already or are still in the process of working out. So here, the top 25 in 2025, some of these had tremendous profit potential. We're going to get to this in just a bit. But before we do this, I want to share with you what are the options to sign up for this alerts service. Because this way we can also take the segue. How can you guys get this free options masterclass? Well, the answer is very easy. All you need to do is to sign up for either the quarterly option of our alert service or the yearly option, which we have newly created. With both options, you will get, first off, $100 off the actual price that it costs you for the first quarter or the first year. You will get our 6-hour options masterclass led by the option professor, where you will learn everything you need to know to take full advantage of our alert service. And on top of this, because a recorded class is one thing, but perhaps you have additional questions. Perhaps you want to pick Jim's brain. Perhaps you want to bounce something off. Well, we will also include 1 hour of personal coaching, one-on-one coaching with the quarterly subscription and 4 hours of one-on-one coaching with the option professor with the yearly option. So if you're looking for what gives you the best value for your money, well, clearly the yearly option it will be, because you get these 4 hours of personal coaching. Now, if you want to take advantage of this offer, simply go to tradingindicators.com/alerts. I'm going to put this link into the chat box right now. And Jim, perhaps, expand a little bit on these two options while I'm typing this one in.
Yeah, many of you guys have done options before, and some haven't done too much. But whatever you've done, I think everything we have here is going to be very helpful to you because that options master class, we're going over, session one, session two, session three. So we're going over really all about trading the option, from picking out the strike, picking out the expiration date. Once they move for you, what are you going to do if it goes against you, that kind of thing. And also you get the coaching. The coaching comes in very handy. We didn't usually do this, but I told Daniel that we have to do it because many of you do not have the experience that I do as far as knowledge is concerned, and so it is helpful to ask me questions like, and even if the trade isn't something that I was one of my ideas, because people do anything they want with the ideas and they get them from all over the place, and or even your stock portfolio in this environment. We've had a market that has been rolling over, in my view, ever since it broke under 6,000 on the S&P. So I've had people who said, well, here's my stocks, what could I do? Well, I give them the alternative. You could sell them out and buy calls to reduce your risk. You could hedge it by buying some puts underneath and maybe sell calls above to pay for it. That's called a collar. And so there's a lot of people who ask me questions because they get the free coaching on things that we're not even talking about options, and they really saved a lot of money because this drop has cost a lot of money. I mean, if you owned Tesla at $480 and it goes down to $250, that's a lot of money. And even the great companies like JP Morgan's gone from $280 down to 220. That's a big loss. Now, everyone thinks it's all going to come right back, and God bless it. I hope it does. But would you have rather been hedged and protected up there at 280 on JP Morgan rather than being down here hoping it stops? I think so. So that's what the coaching can be done is you just text me. I give you my cell number. You text me and you go, Jim, I'm available such and such a time. I put you into the schedule. And then, of course, we have our session. And I'm talking to you just like I'm talking to you now. I'll share my chart like I'm sharing with you today. And we'll go over the stuff you have questions on. I have, a lot of people who I've been helping quite a bit. And when you think about how much money you have at the market at risk, it's kind of silly to not put up a little bit of money like 297 or 897 to, to get information, knowledge, and talk to somebody who knows a lot about this subject matter, who you can actually talk to personally and go through the stuff very slowly. So if some of this stuff seems fast to you, we dial it back down and we stick with it until you understand it. So whether you're starting out or you're experienced, there's no doubt I can help you, I think, in some way, shape, or form. Now, as far as what do you go for a quarter or the year, to me, it's a no-brainer because, you should be making an investment that first of all, you're going to get 12 months of alerts. So that's 4 times the alerts that the 297. So obviously right off the bat, that's 4 times the coaching, 4 times the alerts. And so, that can be very helpful. And again, being able to text me if a question comes up is very helpful to people as well. So yeah, there's no doubt in my mind. I feel extremely confident that I don't care if you went elsewhere and you didn't like it, you went elsewhere and it never worked out for you or whatever. This is a new, fresh start. This is a separate situation, has nothing to do with the past. And so, again, with these markets like they're doing, if they're not working out for you so well, maybe it's time to bring in a new quarterback. And I could certainly be the new quarterback. So, again, think about putting up a little bit of money as an investment into yourself, and then thinking about using the knowledge and using the information to develop yourself. Again, I get into a trade, and the first thing I'm always looking at time and price, right? Time and price. I got to watch the clock. I got to watch the price, right? And I always have an exit strategy as soon as I get in, because again, if we're going to be buying options, we don't have forever to sit on these things. So you always got to be thinking about your exit strategy. And I'm very, very familiar with all the different alternatives, and I can explain that to you as well. A lot of people don't know when to sell. They don't know when to cut and run, and then things get away from them. The option goes down to zero. That doesn't have to happen. So, like I say, invest in yourself a little bit. I've been teaching these options for decades. Okay, I'm not a guy who used to sell furniture, and now I do this now, like half of these guys on the internet. This is something that's been my job for decades. So, I've taught people at all different levels. I can make it understandable for you, and I think for sure I can help you become a better, effective option trader.
Awesome. Yeah. Thanks, Jim. And I agree. We have so many happy members on our service. I get, commentary like Chris. He said, "Hey, Jim, thanks so much for picking out that. I forgot which symbol it was. It, a 10-folded and stuff like this. So it happens. Not every trade is a winner, but our record has shown. Here's some examples that, yeah, Jim definitely has a knack at picking interesting ideas.
Yeah,
All
and
right.
if you're in a strangle and it doesn't happen after a certain period of time, or it goes to one strike in the other, and you can get out at break even, those aren't bad results either. Because by getting out at break even or getting a good portion of your original principal back on the option, it keeps your bankroll more solid, so you can look at a new idea that might give you the bigger volatility. I had a gentleman who went into the Bank of Montreal, and the stock has a 105 and a 95, and it went through the call, but he never sold it, and now it's back down. Now he's playing monkey in the middle. So these are things during the coaching session that I can help you with to have obviously help you trade a little bit better.
Yeah, exactly. So yeah, the coaching is invaluable. I think just to especially if you're new to options, just learning the ropes and what is a strangle, what are things to look for to see an affordable strangle, how to manage it once you are on a strangle, for example. These are very important things that an experienced trader can teach you much better than you could learn, I believe, on your own or through some of the resources on the internet. All right. So with this, Jim, should we look at the markets a little bit to see what's happened today?
Well, I have to give some Pepto Bismol out if you're going to watch the markets, right? Uh, it's been a wild ride. So I got the S&P up here. I have to share with it so everybody can see what I'm talking about. And
Yeah,
I'm going to
please share.
just take a brisk trot through these markets. If you sign up for the alerts and you text me that you want to have a talk, obviously I can go through all these markets slower, and I can go over things that you own slower, and I can at least give you an opinion of what I see, which has been very helpful to people because sometimes a second set of eyes is not a bad thing.
Yeah.
Okay.
And Jim, before you get into this, we had a question that came in. William wanted to know, what are these moving averages that you have on the chart? Can you just
Okay.
quickly explain what the periods are of these ones?
Yeah, and I'll tell you a little explanation of them too. The red line is a 12 SMA, simple moving average, and it tells me the trend is changing. The green and the blue are 24 and 36 simple moving averages, and they tell me that we're going on a long ride. Or it tells me we're not going on a long ride, meaning when red turns down or up and green and blue are also in that direction, we're generally going on a pretty good ride. And the blue is really good because unless they get it to point down, it isn't going down. You can even notice that when these markets had big corrections on the S&P, sometimes the blue line hardly ever went down. So that is telling me that this is temporary. You see, and that tells me it's temporary because if the blue can't turn down, that means you're not going down. Remember what I just said? Unless you got all three going down, obviously you got them all three going down now, right? Did you have a good run to the downside? So there's your example, right? Or once it turned up to the upside here and they all were rising, so that's what the blue and the green helped me with. The purple and the gold are destinations. They are called reversion to the mean levels, and they are 120 SMA and a 250. When it hits purple, I definitely am interested in taking a look at buying because it could be a good place to buy, like it was here, like it was here, and like it was here, even though it got penetrated. Everything's still pointing up. That almost told you this was temporary. Because again, unless they're all pointing down, this is not going to last. This is all my opinion. Okay, so now, like I say, and so it has come down towards gold. This is why it's scary. Okay, it's scary because on the 5-year graph, there's nothing holding the thing up. And that's why I think it could go down to 4,800 at some point. I don't know if it's going to happen right away, but the longer they stay under where these averages are, you see? So just remember this, the longer you see it under anywhere between 5,800 and 5,940. So there's your two numbers. The longer it stays underneath that, these averages will start turning down, right? Because they are moving averages. And the lower the numbers you add, the more they'll roll over. So that's the thing. And if we do get these to roll over, I think the odds are going to the purple line down here towards 4,800 or maybe even gold at 4,400 is going to go up dramatically
Yeah.
because the history of tariffs is not a good one. It can be very problematic. So that's it. What do you think, Dan?
Jim, yeah, it's good. It's great. And I have one esoteric question from Dean, and this relates to the longer term SMAs, the 120 and the 250. And he's asking, and of course, I think it's a bit esoteric. Why not use the 200 and 100 instead? Why do you pick 120 and 250, for example? Is there a specific reason, or is it experience, or why is that?
Yeah, me and a buddy of mine who is a very, very savvy guy came up with these, and we think they work pretty good. And when you find something that you believe in, it makes your trading a lot easier. And so I just believe in these. Now, like I say, they're not magic wands. Maybe the 200's good. I'm just using a little bit of a different tweak on it. But obviously, they all have merit of some type. These are the ones that I have found time and time again have been very, very helpful as far as picking either a trend or a reversion point. And so, it's like anything else. If you find something you can believe in, if you find something you back test that has merit, and then of course if you use them and you feel like you're being successful with them, then obviously, that's the way you do it. So
Yeah.
I guess there's no magic wand to these. There's just ones that I have found over the years to be very effective, and I know how to interpret them. In other words, this thing's getting broken here, right? So the average Joe might say, hey, the average broke, man, I'm going to get short. And I say to myself, no, I don't think so, because blue hasn't turned down, purple's still rising, gold is still rising. So I'm going to think that if this thing gets back above purple and then gets back above red, that this thing could take off. And then if they bring it down here to fill the gap and penetrate the averages again, but the averages are rising, I'm going to say this is a baloney trade. And when it gets back above it, I'm going to buy more. So my interpretation also, it's just not the lines. You obviously have to have an interpretation too.
Yeah.
Like right
Perfect.
now, it looks like the thing's going to collapse, which it very much could. But if it gets back above the gold line here, that's why I'm trying to tell you, if you get back above 54.25 and then 54.50, then I would think that the drop might be over for a while. So that's a good thing to give you a hint on. In fact, this is a time where I think having some parameters on when you'd come back in makes sense. And I just think if we can get above the yellow line there, at least you'd have something underneath you. You see, once you got above purple, at least you have something underneath you. Right now, we could go into the abyss. I mean, this is what it looks like. I mean, people walking around, and believe me, it wouldn't shock me if we went into the abyss, because the policies that caused the sell-off don't seem like they're going away, and there is no technical support that I see if it really starts accelerating. And the VIX is only at 24. We're not at 60. When we had a big sell-off in August, the VIX went to, let me show it to you real quick. The VIX went to 65 during that sell-off with the Japanese carry trade unwind, August 5th. See, people don't remember. I remember. You see the Japanese carry trade there? That's a sell-off. That is a capitulation. That is a bottom, right? Particularly if you go look at the chart where it was hitting a very big support zone. So we don't see that yet. And, if we go to 4,800, you'll probably see that. Okay, and then the VIX will be up there, and people will then realize, you know what, I probably should have hedged that with a couple of put options. So, that's why sitting there, strumming the guitar while Rome's on fire, sometimes not the best thing to do. I did mention that 75 million share NASDAQ 100 volume as sometimes being an indicator of capitulation, at least short term for a bounce. So we'll have to see if Friday and Monday after the full moon makes the thing turn around going into that conference. But yeah, just to give you an idea, when you did get a capitulation in August on that thing, on that big sell-off, this is the August low, you see? Right there. So, when everyone else is selling, what am I doing? I'm saying, no way I'm selling. I'm going to buy the heck out of it. It's right on my blue line. And the VIX just went to 65. Come on, that's got to be the low. You get it? I don't have that now, do I? I've got a blue line that broke for the first time in a long time. And what else do I have? I've got a VIX that's only at 24, and I got a policymaker who is not backing off, not until April 2nd. Between now and April 2nd is an eternity. But if they do want to rally it at the end of the month, so the statements don't go out that ugly, sometimes that happens. You know, right now the statements are all very ugly if they sent them out, right? But at the end of the month, if we had a rally, they wouldn't be quite as ugly. So that's always something that can happen. It's called end of month window dressing. So if you do want to look at it on a short-term basis, I'm looking at the 1 month, and here's what I do have that's somewhat optimistic. You got an RSI right here at that low at 25. Can we see that? 25 right in the box there, RSI. Now we just made new lows and the RSI is at 30. So that's a small divergence, meaning you've made new lows, but the relative strength is higher, which is sometimes an indication that the selling is drying up. So the combination of that divergence and the 75 million share sell-off in the NASDAQ 100, which is extremely high volume, that could mean that we could bounce. So in this particular chart, if you really are a short-term trader, if I go to my 5-day, you know, I'd at least probably like to see, and this has a divergence as well, 33 here and 39 there. So again, if we can get above the red line there, that's at, where are you here? If you can get above 55.37, if you can get above 55.70, then you might have an opportunity to go on a run. So those are some numbers to hang your hat on. My number is 56.25 because I'd like to see it get above the gold line. But if you're a short-term trader and you like to stick your head into a buzzsaw, you know, this is your opportunity to do it. And like I say, you could catch a nice little bounce here if it does turn. And I think it has a little bit of a bid in the aftermarket here tonight, but I'm not sure.
Yep. Well, we'll see. Definitely turbulent times, huh?
Yeah,
And that we are in.
The other thing that people are going to be very surprised at is the interest rates are not going down. So if his goal is to bring the interest rate down, they're not really going down. The 10-year yield recently hit 4.10. And I told people that unless we get underneath 4%, you see it had the purple line down here, but that's a short term. This is what I'm looking at. This thing here is still on an upswing. Okay, but the one that I really watch, because I like to look at the long-term picture on interest rates, the rates are rising and they've been rising since 1.5%. September, they cut the rate by 50 basis points. And look, everyone was thinking that the rates were going to drop. And I said, no way. They're going to stop right here at 350 and go back up. Right now, if it can stay above the 420 area, because that's where the averages come in, 418, stay above that, you know, then the rates can still keep rising. And again, the blue line is the key, but it's going to take time for the blue line to turn down. It's going to take time for these things to turn down. And so it's not going to be a, you know, you see here, if you can get under 4%, you see why I'm saying, then you could get lower interest rates. Okay. And I'm sure if it's going to go down here to 3% or 3.5%, it's going to be accompanied by 4,800 on the S&P. They're not going to bring it down there because they're nice people. You know, there's going to have to be an event. Now, where is things rising is over in the yellow metal. Why is that rising? Well, the central banks obviously have gone nuts with their currency. Even Germany's going nuts with their spending. Although their national debt, I heard, is only $3 billion. They got plenty of room, but they've thrown out the window of you know, deficits, and so they're going. And then China is running the biggest deficit in 30 years, and Trump wants to get a tax cut that's going to put $4 trillion you know, into the budget deficit. So that's why he's cutting jobs and cutting everything and he's got to find money. He wants the tax cut to get extended. He's got to find money. So the bottom line is many people don't think he's going to find enough, and that means printing again. And that's why the gold has a bid, because these central banks have been buying. Why would central banks be buying gold? Because they have a paper currency they're trying to hedge. How about that? And they think there could be trouble. So the bottom line is I thought right now that as long as it stays above, see how it held 2850? That was support. See how it held 2900 area? That's support. And you see it's above 2920. So that's it. So right now it could go as far as it wants to go. And as long as it stays above 2900 and 2850, it's still in a bull market. If they can get it under there and turn these averages down, gold has some substantial drop ahead of it, because you can see here, You got a blue line at 2,700. So it's got a nice drop reversion possibility. But everybody who's been shorting gold against the trend here, they've got new highs here, 3,000, right? So 3,000. And then let's turn over to the other guy called Bitcoin, which I've been very, very accurate at because I don't like to buy things that are way away from the averages. You see where you want to buy it was where I was talking about buying it in this neighborhood, 60 to 65. And then up here where you got the double top. And then I told people there, when the red line turns down, I said, the Bitcoin bulls are quitting and they're going to come down here to go near these high points and to fill the gap. So right now it's 75 grand. That should be the floor. If they let the trapdoor open, where do you go? I don't know. But that's where it should stop right now, is in the 75 grand neighborhood. And if you look at the 1 year graph, you see it's holding on to gold around the same neighborhood. But that trend isn't bullish anymore. The people who made all the money, they did it during this time. They don't make it when it looks like that. So, you know, the bloom is definitely off the rose on Bitcoin. I'm not, listen, I still think that halving thing, there's some merit to it. I still think if the 300% after they have means we're still going back to 150 grand. So if we're going to go back to 150 grand, I'll show you some of the culprits that you want to keep an eye on. And we have ideas in the news, in the weekly report on these. These guys are loaded with Bitcoin. And you see how they used to be? We loved it down here. You see, we loved it down here. And that was a nice ride. But ever since, it's been down, down, down. And once it broke under 350, you see, it couldn't get above 350. That was the end of the story. Now it's down here in the support zone, call it 200 and 250. So if you're bullish on it, you know, and it can get above 350, then you have a chance of making all. So if we're going to 150K on the stock on the Bitcoin, 150K, then obviously you could even be more careful and maybe take a taste of it down here, but then add above 300 and then add above 350 and play it that way. But this is really the Cadillac if you're going to play Bitcoin, because this guy, you know, he borrows money from his neighbors to buy Bitcoin. I mean, he just loves Bitcoin. One last thing on the crude oil, because that is something you got to keep an eye on. That thing's on the verge. So let me show you that. CLK, let's look at the May contract. Yeah, this thing is in a downtrend. It tried to rally and it's been giving it up ever since 73. Now it's near this low. Really important. I'll show you right now. This is the real important. This thing breaks purple and that's at 62 bucks. You hear it in the 50s and who knows where it's going. Because this thing has been, look at how, that's called a little range. If you take the width of that range and you measured it from here, this thing could shock the hell out of people. That's one way of looking at it. The other way is you're looking at the bottom. Because if it can't break under 62 and it starts breaking under above 75 or 80, then this thing could go up and really shock people as well. So this is a very exciting time because it's either going to hold these levels or not. And, you know, with policies and this and that and tariffs and all that, Lord knows where commodity prices are going to go. In fact, I was listening to the guy from Citigroup, commodity specialist. He's very bullish on gold right now. Obviously, he's also bullish on copper. So if he's bullish on copper because of tariffs, I wonder what this stock looks like. This is Freeport McMoran. Let's see if it's doing something here. 20-year graph doesn't look that great. 5-year graph, it's right on gold, but I don't like that trend being down. But I'd keep an eye on it because if there's going to be a substantial rise in copper prices, maybe these guys could make out. And it is at least near that gold line. And look at all these moving averages meeting. You see, when they meet like this, that the price generally doesn't stay the same. So I think this thing could either pop up or give it up. So this is an idea where a strangle might make some sense. I'll price one out for this weekend because, again, the guy was looking for a big move in the copper and the gold. So that was interesting. And I'm going to just, you know, this is something that you guys should keep an eye on because the money is going overseas. And it's going overseas because they are doing things over there that get people, that have people excited. And they are very inexpensive compared to us. far as valuations. But they had a big move, and the tough talk has caused a pullback. Now, this is on Europe. Now, I was telling people, because I cover this in the newsletter, and I said, listen, this stuff is all from Trump becoming a big bear. Now, if he's not a big bear, then this thing is going to come back up. And when he started taking tariffs off right away, this thing rallied like heck. Now it's pulled back. It is a bull situation. So again, to give you an idea, this thing is in an uptrend. So if you find dips, you might find places to maybe take a shot at it here. The other one that's going up quite a bit is also China. And China is another one that I've been talking about. That's where the Alibaba idea came from. And China's running into some resistance here. And it backed off a little bit. So, this is a neighborhood of resistance. If it can't get through, you can pull back, right? You can pull back. If it can get through, there's a lot of potential to it, because if it gets through the 20-year graph, there's a lot of white up here to be filled in, correct? And then a real timely one is the one I'm going to leave you with here. And this is on the Japanese stock market, because this one looks like a good, I even put a strangle idea. I'll give you a strangle idea on it right now. Okay, you look at the 5-year graph on it. What does it look like? See, it's in a big traffic jam here, right? Right around 68, 69 bucks. It's not going to stay there forever. I think it'll bust out here between now and next month, possibly. So what about the 1-year graph? Another one, you see it's in a traffic jam right here, right around $69. So I was shocked to find out that if you go out till April 17th, a $70 call and a 69 put cost $265 total price, which means you'd have the right to buy it at 70 there and a right to sell it at 68 there. It's right there at 69. So and this thing looks like it wants to break to the upside, really. So the bottom line is the 70 calls are the ones you probably, unless they just tank it. But again, 265 bucks to get a 70 and a 68 with the darn thing in a real tight range at 69, and all kinds of news probably hitting the tape between now and April 17. I don't think that's a bad looking one either, because if it pops, you can get some action on it.
Yeah, this was well put, because for a strangle, 3 things need to come together. Well, you need to have a stock which is likely to break out up or down. You need to have reasonably priced strangle prices, options prices, and the range for your strike prices needs to be as narrow as possible. And this is one trade where everything comes together. But these are not easy to find, and this is exactly where Jim's report comes in every Sunday, because he's finding these things for you so that you can then zoom in on these opportunities and pick the ones which seem right for you.
And one last thing is there's not a law passed that you have to do the call and the put at the same time. If you think the preponderance of the evidence is that it's going to go one way, you can start out by buying the call and just have your trigger finger ready to buy a put if it looks like it's folding. Now, sometimes that's risky because it can collapse overnight, but a lot of times it doesn't do that, and it actually goes where the trend is pointing. So again, although we do strangles, it's not, these are ideas. It's not imperative to do both at the same time. And some people who leg into these things sometimes are happier for it. And every once in a while, it'll just collapse one way or the other, and you'll say, I should have done them both at the same time. If the options are cheap enough, it really doesn't matter. So anyway, just, you can use some of your own personal adjustments on these ideas, and people do all the time.
Perfect. Yeah, exactly. All right, so I'm going to grab the screen back real quick and maybe just stop sharing, Jim. And that way we can review one more time the offer that we have prepared for you for our options alert service. The link is already in the chat. It's tradingindicators.com/alerts. And as reviewed previously, we do have an interesting quarterly option, but an even more interesting yearly option, which gives you the best value for your money. Each of these options come with the 6-hour options masterclass, where you learn everything you need to know to take full advantage of our option alerts, which it will also help you which ones to pick and how to manage your options trade once you're in it. And of course, with the yearly option, you will also get 4 hours of personal one-on-one coaching, which I think is invaluable because it gives you the opportunity to pick Jim's brain, to ask questions, to bounce off ideas, to review your open trades. All right, so tradingindicators.com/alerts it is. With this, if you guys have any questions, by all means, please reach out to us, reach out to Jim at professor@tradingindicators.com for any question, whether you are a current subscriber or perhaps contemplating getting on board. That's the email address you can reach Jim at any time. And also, if you just want to reach out to me here at tradingindicators.com, simply go to our homepage, tradingindicators.com, go to the main menu, click on contact, put your questions into the contact form. It will go straight to my inbox. I'll make sure to answer every single question that comes in there. All right. So with this, I'll thank you so much, Jim, for this super interesting and very timely webinar on quantum computing and stocks, which might become interesting if you want to get some exposure in the quantum field. Thank you so much. I do see some thank yous also in our Q&A. So I'm glad, guys, you found it useful. Perfect. With this, have a great evening. I know we have quite a few people from overseas in Europe. Have a good night. It must be super late over there. If you're in Australia, we have one guy. Have a nice morning, have a nice breakfast, and for all of us here on the East Coast or in the US, well, have a nice evening, enjoy your night, and talk to you soon. Thanks, Jim.
Thank you.
Bye-bye.